Welcome to Biz Wire. We lead off today with Chinese companies who are deserting U.S. stock markets in record numbers as regulatory scrutiny mounts and the advantages of a U.S. listing seem to be slipping away. SEC investigations of suspect financial reports have battered share prices and have, for many Chinese companies, limited the chances of raising new money in the United States, giving them little reason to stay, say China experts. James Feltman, a senior managing director at Mesirow Financial Consulting, said that there's very little new capital flows to these companies. Their valuations are low and they're encountering significant headwinds in terms of regulatory oversight. Well, 27 China-based companies with U.S. listings announced plans to go private through buyouts last year, up from 16 in 2011 and just 6 in 2010, according to investment bank Roth Capital Partners. Before 2010, Roth added only 1 to 2 privatizations a year were typically done by China-based companies. In addition, about 50, mostly small Chinese companies, went dark or deregistered with the SEC, ending their requirements for public disclosures. That was up from about 40 in 2011 and the most since at least 1994, when the SEC's records start. Companies with a limited number of shareholders can voluntarily go dark and rid themselves of the cost of public filings without buying out investors, but those investors often suffer as the value of their shares fall. Meanwhile, just 3 Chinese companies successfully went public on U.S. exchanges last year, down from 12 in 2011 and 41 in 2010. About 300 China-based companies still have shares trading in the United States on exchanges or over-the-counter between individual dealers. Bankers who can earn lucrative listing fees are aggressively pitching the idea of companies pulling out of the United States and relisting elsewhere, saying they can get a better share price in Hong Kong or mainland China, according to lawyers who work on going private deals. Mark Lemkuehler, a partner at Davis Polk in Hong Kong, says the idea is that the markets in Asia understand the China story better and may therefore assign a higher valuation to the stocks. The United States has been trying to get access to audit records and permission to inspect Chinese audit firms to combat a rash of accounting scandals. China has balked, leaving the future of U.S. listings for Chinese companies in doubt. Paul Gillis, an accounting professor at Peking University in Beijing, said he expects Chinese companies are making alternative arrangements in case U.S. and Chinese regulators do not reach a deal.